The Elliott wave theory is a fantastic approach to understand the market cycles. Today, we are going to have a trade review on the S&P to show you how to find the end of a wave and how to do it with little risk, tiny risk actually, and to have a clear plan to book profits. This is a professional example. This is a real life example in the Elliott Wave Street membership. We were following this trade this week, and I want to show you the reasons why we validate the trade right there, how to do it, and of course how to be part of this type of setups. We started the week with a big gap formation on the S&P. Of course, it's hard to trade after that. A crazy week in the markets, but then everything started to go up better, and this week we were here, and the main plan was finding the end of the second wave. The Elliott wave theory itself is not going to provide you that answer. We're going to go through the step-by-step process to validate that the bottom of the market, but the main plan here was having the move up at least to this area, probably here, and to continue with the trend. Now, let's move into the details. Let's go into the 5-minute chart. So once you have an Elliott wave plan, the next step is going into the lower time frames and validating and making sure that supply and demand is ready to start showing the setup. So here we are, traders, now on the 5-minute chart at that very precise moment of the price, but on the 5-minute chart. And here, as we can see, the price has been selling. So let me ask you something. What if you are here, let's suppose that you have this exact situation in front of you, and you believe that this is the second wave or whatever, what will you do here? What do you think you will be doing here? You're starting your session and you are looking for the end of the second wave. Tell me in the comments what you will be doing here. So pause the video and type in the comments if you were going short, you were going long. Listen, we have here the break of a previous key level. Is that a short trade for you? Or how do you manage this type of price action? That's an interesting exercise, so type it in the comments. Now, let me give you some hints to do this in an easy way and an objective way. Right? So, as we can see, traders, the supply remains strong. So, with this candle that we are going to call it Charlie, Charlie comes with big volume and big close. So we have or powerful close. We have effort and good result. You are finding the end of the second wave. You are not doing anything yet. You are just waiting. Let me zoom in more. You can see the details. So with this candle, you know that probably we're going to have another low, right? So you wait. You wait. You're not doing anything. You're just waiting. Look, the price starts. The price starts showing some discount, but the volume is getting lower. So the volume is reducing while the price is going up. So you have a strong supply and weak demand. So far, you don't have anything. You're still waiting. Now, the next candle, we have the price making a fresh low, and the volume drops compared to Charlie. So this is our Charlie candle, and this is Tango. So we have Tango and we have Charlie, Charlie and Tango. Tango makes the low, fails to break it down the low, has a stronger close, and we have there that not only supply is weak, but demand is starting to show something interesting. So let me ask you something. If you are here now, what do you think you will do? Well, let me tell you what I did here. Actually, we did this in the trading room this week. So look, there is an option. We can buy one tick above this candle. We can do that. We can set a buy stop order one tick above the high of the candle. Or we can wait for a candle to close above the high of the previous candle. Those are our two triggers. So the next candle here, traders, closes higher here. So we can either buy it here. We like that approach. We call it the tape entry. We have a whole Wyckoff course in the website included in the membership. If you want to learn real Wyckoff, the original Wyckoff theory, we have it there. And this will be the Wyckoff approach entry point, or here, whatever you prefer. So in both cases, we have a small risk. The risk is just here. The stop loss should be just one tick below the low. You don't need to risk more. Either enter here or enter here. You are seeing that now volume is starting to pick up, this time when the price goes up. So there we have another element that is telling that demand is gaining the battle, let's say, and we are seeing the rejection of this key area. I tell my clients the first step when you're going to trade is to start drawing your levels. It's quite easy. Liquidity levels. We trade from an institutional point of view. So we trade in a different way than retail trading. But levels, we see them as liquidity. And the liquidity is extremely important, traders. Learning liquidity is something fantastic. And this works for any market. So here, traders, we're having many elements. And if we trigger here the trade, and we already reach a 1-to-1 risk-reward ratio, we can book some profits. If we just trigger here, we're waiting, right? So the next candles here, they start moving in the direction that we were looking, and of course, we know that could be a good potential reversal point for the second wave. But remember, you need to trigger your trade close to the low. You cannot trade too late, because the stop loss is going to start increasing. Precision is key when you are looking for your reversals. And you may be saying, okay, but why you didn't buy here? Well, look at the volume. The volume is clearly telling that the price is going to continue lower. So there are many details that you can watch to filter out the trades. Now, we were following this trade, and eventually, let's get to that candle. I remember that there was a long tail candle somewhere here. Where are you? There you go. This candle trade. So at this stage, we already have, let me show you, 1-to-1 on the worst case scenario, right? If we trigger with this candle, we have a 1-to-1 and roughly a 1-to-2 risk-reward ratio. That could be more than enough for a successful day trade session. We have a good volume, so that tells that we're likely to continue. But this candle, like checking the individual candle, is something that we have to be careful with. In this case, if you are bullish and you're long, you can either tighten your stop loss here, or here, or here, or either here. With experience, when you practice this several times, and in your favorite market, if you trade Forex, or if you trade cryptos, or you trade stocks or futures or options or whatever you like, actually let me know in the comments what market is your favorite and why. Not only which market you trade, tell me why you like that market. That will be really interesting. If you like futures, or if you like the Forex market, or what do you trade? And why? And why you like that market to trade? But this same approach, you can apply it on any market. So here, traders, we have different options, but we have to be careful. This is something to be careful, right? We can book some profits, for example, we can tighten the stop loss. Just be careful. Then traders, the price that the price continue higher, and here we have to be really careful. Trade with this candle here, we have to be extremely careful because volume is increasing, but the result is not increasing. Effort versus result, and when the price then continues, look, it starts the sell-off, and here that day we were looking for buying it. However, the speed of these candles, in this case, we didn't trigger it because it was too fast, and the validation, look at the validation here, is crazy. That's too late. I'm not going to buy here and set a stop loss here. That's too huge. And at the end, traders, that session was beautiful. It was a great session. So you can see the potential of these plans. The wave 3 finally developed during the session. But one of the key points is that when you trigger your trade, you can look for just a 1-to-1 or a 1-to-2 risk-reward ratio. And that can be good for you to be consistent, because not every day you're going to have this type of legs. So something that is important to get used to is to make your day, make the minimum what you need to be consistent during the month, day by day, with few points. And some days you're going to be able to catch a bigger move. Yeah, great. You make more money that day. Great, of course. But remember that you don't need a lot to be successful. Just with a 1-to-1, 1-to-2, but being consistent all the time. Some days you can make more, whatever. You are going to do fine, and you are going to be successful in this business. In our training process, we have the live sessions every day where we do these exercises in the live markets. And we have the Discord server where I share the setups. Then we cover with a lot of comments in the trading rooms, and you also get the recordings, and there is a lot of material that you can have, and everything under the frame of the Elliott theory. So traders, this is a great example. We use volume, we use value, we use the Elliott theory. We use many elements to confirm those trades. If you want to join our group, we have a fantastic community of traders here on ElliottWaveStreet.com. Go to the membership tab, and here you will find our plans. We're having a special offer, a 50% of discount on any plan for your first month to try it out, with a 50% discount than the regular price. So here you can check whatever which plan you prefer. We have the Premier, Elite, and Mastermind access. And down here, traders, we have also the AvaTrade special offer for international clients, in case that you want to access the membership for free. You can apply for the scholarship that the broker offers for international clients outside the US, because the broker doesn't offer their service in the US. And just follow the instructions. We have here a PDF with the step-by-step process. All right, traders, so this is it. Have a fantastic rest of your day. I'll see you soon. Take care. Bye-bye.